pchem is the leading integrated chemicals producer in Malaysia and one of the largest in Southeast Asia by production volume. By 2020, they had over 30 subsidiaries, either wholly owned to joint ventures and associates. They have the capacity to produce 12.8 million tons per annum of chemicals. So pchem produces about 18 times the weight of both Twin Towers in 2019. That is a lot of chemical, guys. Hey everyone, welcome back to our channel, the best place for long-term stock investors. My name is John, and in this video, you're going to learn about Petronas Chemical Group Berhad, or pchem, stock ticker 5183, listed on the Kuala Lumpur Stock Exchange. Chemicals, so ubiquitous in our everyday lives that we often take it for granted. Don't believe me? Name me one thing that you use today before watching this video that doesn't use any form of chemicals. Let me see. I can name you at least 3 that I've used today. The soap for my bathing, the materials used for the interior of my car that I drove, and even the Crocs sandals that I wore today. So what does this have to do with Petronas Chemicals or pchem? Well, everything actually. Before we dive into that, let's talk about the history and management of pchem, its business model, its latest financial status, as well as the risks or potential rewards if you're going to invest in this company. So we begin with its history and management. pchem was incorporated in March 1998 as a private limited company by the name of Kuantan Terminals in Berhad as part of the Petronas Group. It changed its name to Petronas Chemicals in Berhad on the 26th of October 2009 after an internal reorganization. In August 2010, it was converted into a public limited company and renamed Petronas Chemicals Group Berhad. Since 1995, they either began building their own plants, producing petrochemical products like ammonia and urea in Bintulu, to acrylic acids, as well as buying over interests from their joint venture partners, the likes of BP, BASF, Dow Chemicals and Idemitsu. By 2020, they had over 30 subsidiaries, either wholly owned to joint ventures and associates. They have a geographical footprint that spans the world, from North and South America to Europe to the Middle East, all the way to Japan as well as China. This was aided by the acquisition of the Da Vinci Group, their first foray into specialty chemicals industry. pchem is a constituent of the FBM KLCI with a current market capitalization of 55 billion at the point of this recording. Malaysians should be proud to have a company that actually spans the globe. While there were no individual founders of pchem, we can look at who are leading the company at this moment. First up, its Managing Director and CEO, Datuk Sazali Hamzah. A chemical engineer by training, he joined Petronas as a process technologist and rose through the ranks in the refinery and petrochemical business to become the CEO of pchem today. He's helped by the Chief Financial Officer, Cik Rashida Alias, who started out in Otter and Dresden in audit and advisory, before joining Petronas and held various positions before helming the top role in finance in pchem. Encik Muhammad Kabir bin Nordin is the newly appointed Chief Manufacturing Officer, and his role includes operational excellence of all their facilities for the entire group. Prior to this, he was head of gas processing and utilities of Petronas Gas Berhad before joining pchem. By the way, have you gotten a copy of our stock portfolio guidebook? In it, we show you the tips and tricks on how to start constructing your 6-figure portfolio and what we can learn from the rich in their asset class choices. Best part, it's free and you can find the link in the comment sections below. Next up, pchem's business model. pchem is the leading integrated chemicals producer in Malaysia and one of the largest in Southeast Asia by production volume. Their total production volume of chemicals in 2019 was 10.4 million TPA or tons per annum at the end of 2019. At the time of this recording, their 2020 annual report has yet to be released. They have the capacity to produce 12.8 million tons per annum of chemicals. Now, just to give you guys an indication of what 10.4 million ton looks like. I'm pretty sure you've heard of the Petronas Twin Towers in Kuala Lumpur, right? Well, it weighs roughly about 300,000 tons each. So combined, you get 600,000 tons. So pchem produces about 18 times the weight of both Twin Towers in 2019. That is a lot of chemical, guys. What kind of chemicals do they produce? Well, quite a lot of them, but they can generally be categorized into two segments, which are namely olefins and derivatives, and fertilizer and methanol. The olefins and derivative or O&D segment produces basic products of ethylene, propylene, and butane, and isobutylene using natural gas-based feedstock, such as ethane, propane, and butane. For those of you who took chemistry in school, do you still remember your hydrocarbon chains and naming conventions? I basically returned all my knowledge to my chemistry teacher already. So, the chemical mouthfuls earlier just meant that they're using light natural gas as raw materials to build raw materials for other industries such as packaging, automotive, construction, electronics, pharmaceutical, and even personal care products. It's like the cocoa manufacturers producing chocolate pellets or cocoa powder for the bakery industry, and they instead produce moist chocolate cakes or your tiramisu. Wait, tiramisu has chocolate, right? I think so. The current production hubs of their O&D is based in Kerteh, Terengganu and Gebeng, Pahang, and they mainly use natural gas as their raw feedstock. This will change though when their newly integrated chemical plant called the Pengerang Integrated Complex down south in Johor is up and running, and it will have a higher mix of naphtha, which is a crude oil-based product, as their feedstock. For the cumulative quarter ending 30th September 2020, the O&D segment made up 57% of the revenue and 24% of their net profit. Their fertilizer and methanol or F&M segment produces key products such as methanol, ammonia and urea, using natural gas feedstock, which is methane. Their main hubs for the F&M segment are located in Gurun, Bintulu, Labuan, and Sepitang in Sabah. The main clients for this segment include the agriculture industry that requires nitrogen, phosphate, and compound fertilizers like urea, ammonia. Some of these are just direct products such as methanol that can be used in plywood adhesives, synthetic fibers, films, and high-performance plastic. Now you see, I'm speaking about the breadth of the entire petrochemicals industry already. The F&M segment contributes about 36% of revenue and 78% of total net profit for the group. pchem also has JVs and associates in their business segment, but it only currently makes up a minority portion of their revenue, which is less than 1%. These are partnerships they have with companies such as BASF, BP Chemicals, Dow Chemicals, Mitsubishi Corporation, and Sasso Limited, to name a few. As you can see, their key business objective is to produce chemical products for further processing by their clients or direct end products for usage like methanol. The applications of their chemical products are so wide-ranging that it's almost impossible to name every single one in detail. But it also goes to show you how prevalent petrochemical products are embedded in our everyday lives. If you like what you're seeing so far, please do me a favor by smashing that like button, and if you're new to our channel, remember to subscribe and hit that notification bell so you know when the next videos are out. How are pchem's financials? At the time of this recording, a few major events have hit the world economy. The first up, COVID-19, which has restricted most business activities throughout the world. pchem was not spared, and it took a hit on their trailing 12 months revenue. It dropped by about 10% from their 2020 results, 16.37 billion to 14.76 billion. It also didn't help with the fluctuation in the prices of crude oil, and their average product prices dropped in tandem with lower crude oil prices and softer demand. Operating cash flow also dropped from 5.67 billion to 3.1 billion. It's not been a good 2 years from the heydays of 2018 when pchem hit its highest operating cash flow of 7 billion. However, one contributing factor is the huge depreciation cost of 1.7 billion at the end of financial year end 2019. On the asset side of things, they have plowed a lot by investing into their future growth. This is evident by their heavy spending into their Pengerang Integrated Complex or PIC, as well as their purchase of the Da Vinci Group. Even with declining revenues and profit, they still managed to keep their net cash position, as their cash and cash equivalents of 12 billion still surpassed that of their total liabilities of 8.4 billion. A big chunk of their liabilities come from their trade and other payables of 2.66 billion. So, they still managed to come up with a healthy balance sheet, commendable revenue and profit, even though they had a double whammy, a pandemic and low oil prices to deal with. So what are pchem's business risks? I don't believe I'll be able to capture all of pchem's business risks, but I'll highlight what I believe are the key ones. Firstly, the ability to secure the supply of natural gas as feedstock from Petronas Group at a favourable prices. Feedstock costs made up the largest component of their operating costs, averaging between 55 to 58% of their cost of revenue in the most recent years. They have mainly purchased feedstock from the Petronas Group under a long-term supply contract at reasonable prices, and if the pricing terms are revised upwards, it may have an impact to their working capital and financial condition. Secondly, the petrochemicals industry is very capital intensive. Hey guys, building petrochemical plants are not cheap to maintain and to grow, okay? As you heard in the earlier part of the video, I mentioned they recently purchased the Da Vinci Group, as well as plowed substantial capex in 2019 to the tune of 2.7 billion. Therefore, maintaining a healthy balance sheet and keeping debts at a healthy level is key to sustainable growth of the company. Thirdly, their business is mainly concentrated in Malaysia and the Asia-Pacific region. Therefore, their growth is very dependent on the future economic growth of Malaysia and other countries within this region. Any ill-planned government policies or even trade wars that causes an increase in import tariffs will heavily impact pchem's products and their business. So, after looking at the risks of pchem, what is the potential catalyst for growth of the company? It is risky that the business is being concentrated in Malaysia and the Asia-Pacific region. However, which region would you rather it to be? Asia-Pacific or Europe, where there's stagnating growth? The rising demand for petroleum derivative products will only rise with the growing economies of Asia, including Malaysia. Hey, I think we're growing into a middle-class country, right? With their recent foray into specialty chemicals industry by purchasing the Da Vinci Group, they've gained a foothold in the silicon niche of the industry, as well as a company with a global footprint. Secondly, because of their relationship with their parent company Petronas, they are likely to renew their natural gas feedstock supply agreement at favourable rates, as Petronas is still a majority owner of the pchem group. Hey, I don't think the father will abandon the son, right? Thirdly, oil prices are seeing some recovery as the COVID-19 pandemic subsides, and based on estimates, with each $1 barrel increase of crude oil prices, it will increase pchem's net profit by 0.8%. As a conclusion, size and scale does matter in the petrochemicals industry. This is coupled with excellent utilization rates, that just means how well the factories are being run. And pchem has been achieving this over the past few years. This will likely see a growth in their business from strength to strength to meet the rising demand of chemicals within the region and maybe beyond too. If you love what you saw, please do smash that like button and notification bell for me. Come watch some of our other videos and follow us on Facebook and Instagram. See you all.